Hey, Moneymakers, welcome to another episode of Taking Stock Live. I'm Kalila, and it's my pleasure to be here with you yet another week. And thank you for 80K subscribers. Let's get it to 100. My kids are so excited about us getting to 100K because they're like, Mommy, you're going to get a plaque. So make it happen. Hit the like button, subscribe to the channel, and share with a friend. So there's a lot going on in the Caribbean right now, a lot going on in the world right now. And the Caribbean is really stuck in the middle. The geopolitics is at play, the economics at play, all the different things coming together to form kind of a perfect storm here in the Caribbean. Maybe I shouldn't even use that terminology because Hurricane Melissa, we don't want to be talking about storms in the Caribbean right now. But yeah, with everything going on in Venezuela, Trinidad, Barbados having elections, Jamaica, economic transformation, there's just a lot going on. And of course, the United States. Remember Monroe Doctrine and all these things? We're going to be talking about it. Or actually, I'm going to be playing a speech about it tonight. It's a speech that I've been wanting you guys to hear for the past couple of weeks since I first heard it. And I want to share that with you coming up in tonight's show. And then later on, we'll be looking at the impact of those credit ratings. As you may have heard, Fitch has reaffirmed Jamaica as a BB- with a stable outlook. And our analysts will be telling us how that impacts us, among other things. Now, tell a friend that Taking Stock is on and live. Share with a friend, subscribe to the channel. Make sure you're on the newsletter. Go to getmoneynews.com to subscribe. And I'll see you on the other side. Here's a look at what's coming up in tonight's show, followed by What's Hot in Business. And then come on, let's get this money.
But first, here's What's Hot, brought to you by JMMB Group, your best interest at heart.
The National Housing Trust says it has paid out $409 million to contributors under its Hurricane Melissa Relief Grant. The agency said just over 1,000 of the nearly 4,000 applications received as of January 27 have been processed. The NHT offers a maximum grant of $500,000 to current and past contributors and pensioners in Western Jamaica who were impacted by the Category 5 storm. The agency explains that the payouts are subject to assessment. Applicants will get what they need to help them recover. Vandalism and theft cost Jamaica's utility companies around $350 million a year. According to officials, the total number is likely much higher because not all utility providers disclosed their full losses. Several indirect costs were also not factored in. JPS reported the highest level of losses, estimating that electricity theft costs the company $200 million annually. The company said of its 1 million electricity users, 350,000 are illegal. Meanwhile, Digicel reported $3.9 million in direct losses over a 12-month period. This was driven by targeted attacks on critical infrastructure. NCB Financial Group says it will transfer its Cayman Islands banking operations to its subsidiary Clarion Bank. The reorganization will see NCB Cayman and a portfolio of wealth management clients move under the Clarion brand. NCBFG said the transfer won't materially affect the group's capital, liquidity, or ownership structure, but will bring together complementary capabilities within a single platform. NCB Cayman operates private banking, wealth management, investment banking, and trust services. PepsiCo is slashing the prices of some of its products in the U.S. by 15%. The company makes snacks like Doritos, Lay's, and owns Quaker Oats, Gatorade, and Lipton iced tea. The move comes years after backlash against previous price hikes and dwindling sales. The company said packaging size, ingredients, and taste will not change despite the price cuts. However, it did stress that product prices are only recommendations and shelf prices are ultimately set by retailers.
What's Hot was brought to you by JMMB Group, your best interest at heart.
Are you living on or in possession of family land? Do you want to sell or subdivide the property? Use eLand Jamaica to search for details on the property. You can complete a title search and verify the owner before you sell the property. If your name does not appear on the title, register the land or clarify the existing title in your name before you sell. A title is a notice to the world of your ownership of land. For more information, contact the National Land Agency at 876-750-5263 or 876-946-5263. The National Land Agency, one goal, to serve you better.
Welcome back. Let me see who's joining us and where you are from. All right, so Learn, Grow, Invest says, congratulations on 80K subscribers. Thank you so much. Techie says, greetings to everyone. Nana Sense is joining us from far, far away. Dwight is in Spanish Town. Philberg is saying, hey, Kay. And he is in TCI, but the heart is always in Jamaica. We've got Kish saying good night. We've got Denval in Nassau in the Bahamas. Travis is in Florida. Who else do we have? Who else is online? Ingrid saying, checking in from 8 Miles, Bull Bay, St. Andrew. And Kish is joining in from London. So let me know in the chat what part of Jamaica or what part of the world you are joining us from. And as you can see, we've got quite a few international viewers this evening, whether you're from the diaspora or you're from the Caribbean and checking in. We have Valentine's Day coming up, right? This Saturday, the 14th, is Valentine's Day. And there are many ways that you can show love, especially from abroad. If you live in the USA, Canada, or the UK, and you want to show some love to your family and friends back home in Jamaica, then you can always send money back home using Tap Tap Send. Remember, there are no fees when you send that money. So you send $100, your family member receives $100. And when you sign up using my code Kalila10, you get an extra $10 on your very first money transfer. So go to the Google Play Store or the App Store, download the Tap Tap Send app, and you can send that money transfer and get an extra $10 on your very first transfer. Remember, this is only for people who live in the United States, Canada, or the UK. If you try to download it here from the Caribbean, it is not going to work. I don't think you'll even see it in the Play Store. It won't be available for our region. So there is a speech that I've been thinking about ever since I heard it a couple of weeks ago at the JSE's conference. As a matter of fact, it earned the speaker the honorary title of professor bestowed by none other than Prime Minister Andrew Holness. And the speaker is CEO of NCB Capital Markets, Angus Young. He delivered what we would describe as a treatise on Caribbean geopolitics, linking all the various things that are going on right now to how we could potentially grow in the region. What is going on with Venezuela, with the United States, with Trinidad, with Jamaica, with Guyana, and how this impacts all of us, the investment climate and the capital markets. And when I say he delivered a treatise, I want you to watch this speech and comment in the comments what you think as he is going along, because I think Angus delivered some really important insights. And this is why I've been wanting to play this speech for you for the past few weeks. And I told my producer, if we ever have a cancellation, play Angus's speech. And lo and behold, we had a cancellation today. So here we go. I finally get the opportunity to share this with you. Here's CEO of NCB Capital Markets, Angus Young.
Good evening, everyone. All protocols observed, but of course, with special mention to Dr. the Honorable Andrew Holness, Prime Minister of Jamaica, the Honorable Minister Fayval Williams, Minister of Finance and Public Service, and of course, the Honorable Orvin Hill, Minister of Industry, Investment and Commerce. Ladies and gentlemen, Good evening. My purpose this evening is to provide a practical overview of two significant issues that influence the investability of our region, specifically the English-speaking Caribbean. These two issues are current geopolitical developments and evolving regulatory environments. So let's start with current-day geopolitics. In the latter half of 2025, the United States initiated a significant military buildup in the Caribbean Sea under the stated purpose of combating drug trafficking. The situation escalated as the US began a series of deadly strikes in September 2025 against vessels alleged to be smuggling narcotics. President Trump characterized these actions as an armed conflict with drug cartels. By November 2025, the force was bolstered by the arrival of the US Gerald Ford aircraft carrier strike group, creating the largest US military concentration in the region for decades. The scenario intensified in December when the US imposed naval quarantine on oil tankers servicing Venezuela and conducted the first land-based strike on a Venezuelan port facility allegedly used by narcotics traffickers. The climax of the operation occurred on January 3rd, 2026, 17 days ago, when US forces bombed and invaded Venezuela and captured Venezuelan President Nicolas Maduro. In the days that followed, President Trump issued stark warnings to Cuba and Colombia. When you look at it, the invasion of Venezuela has several striking similarities with the Bay of Pigs assault in Cuba, 1961, and the US invasion of Grenada, 1983. With respect to the Bay of Pigs, the CIA-led operation aimed to overthrow Fidel Castro's government. The justification was rooted in Cold War politics, with the US viewing Castro's socialist regime and its ties to the Soviet Union as a significant threat to American interests in the Western Hemisphere. With respect to the invasion of Grenada, the primary public justification was the need to protect American medical students on the island following a coup. We could also reflect on the 1989 invasion of Panama, where one of the main stated objectives was to bring Panamanian leader Manuel Noriega to justice on drug trafficking charges. We can also reflect on Nicaragua. Cuba, Grenada, Panama, Nicaragua all share one outcome: regime change was the ultimate goal. But fast forward to today, and while regime change may still form part of the geopolitical agenda, the dominant underlying driver appears to be energy security. Following Venezuela, attention has now shifted to Greenland. The strategic value of Greenland lies in its geographic position, which is critical for Arctic control, and its vast, largely untapped reservoir of natural resources. The Arctic is increasingly emerging as a new frontier for geopolitical competition and strategic dominance. Of course, Greenland is believed to hold one of the world's largest deposits of rare earth, and of course, to possess significant reserves of oil, natural gas, uranium, zinc, and gold assets. Okay. So before I transition the conversation to our region, please keep in mind that the rapid growth of artificial intelligence and cryptocurrency mining has introduced an unprecedented level of new demand on the US power grid. Let us now focus on the region. I tie my synopsis of the current day geopolitical scenario to our agenda because in my mind, for many years, whether it was true or not, there has been a prevailing perception that the Caribbean region was relatively stable and safe when compared to the rest of the world. This stability and peace contributed to its attractiveness where capital investment was concerned. The biggest risk was climate change and weather related. Tonight, I want to share some perspectives that may change this view. Guyana provides a clear example. ExxonMobil is unequivocally the largest oil producer in Guyana. The Guyana opportunity is well documented, and has been discussed at previous GSE conferences over the last couple of years. As of September 2025, Guyana's Natural Resource Fund holds a balance of $3.6 billion US. Now, for those of you who are not familiar with the Guyana story, let me give a brief synopsis. Guyana's oil reserves are large on a global scale. Most of it sits 100 to 120 miles offshore. You can't even see Guyana. To get the oil out of the ground, up through the ocean, onto a ship, there are things called FPSOs, floating production storage offloading vessels, that are very, very large. There are 7 FPSOs destined to service Guyana. 4 are currently in service, 3 are being built. In less than 3 years, with only 4 of the 7 FPSOs, Guyana's sovereign wealth fund has amassed $3.6 billion US. Trinidad and Tobago, moving to Trinidad and Tobago now, do you know that in August 2025, ExxonMobil secured a major deal with Trinidad and Tobago to explore for oil and gas in a vast ultra-deepwater block off the country's east coast? This marks the energy giant's significant return to Trinidad after a 2-decade absence. It is worth asking, who is 6 miles away from Trinidad? Enter Venezuela. Venezuela has the largest proven oil reserves in the world. As of 2025, estimates place Venezuela's proven oil reserves at approximately 303 billion barrels, which accounts for roughly 17 to 18% of the global total. This positions Venezuela ahead of major oil-rich nations like Saudi Arabia, Iran, and Canada. Venezuela, Guyana, Trinidad and Tobago, 3 countries blessed with significant amounts of oil and gas, all are in very close proximity to each other. Where the invasion of Venezuela is concerned, the divergence from the broader CARICOM perspective stems from Trinidad's geopolitical reality. For most CARICOM nations, the invasion is a concerning regional event. For Trinidad and Tobago, it is an immediate and critical national security crisis unfolding just a few miles from its coast. Trinidad and Tobago's natural gas production reached its peak in 2010. Today, at the Point Lisas industrial estate, a number of gas-fed plants have been forced to lie idle or shut down over the years due to a decline in natural gas production and supply. In July 2023, it was reported that 4 plants at Point Lisas had been shut down. That's 4 out of about 7 plants. Trinidad has to access Venezuela's vast Dragon field in order to resuscitate the nation's gas-dependent industries, including its liquefied natural gas and petrochemical sectors. The influx of gas is crucial for the country's energy security and economic stability. I share these insights to provide greater context on global geopolitics and its implications for our region. Because if we are to retain capital and attract foreign direct investment, we must pay close attention to the global political agenda unfolding in our own backyard. In doing so, those of us in this room have a responsibility to identify opportunities while actively mitigating risks for our investors, our businesses, and the region as a whole. So let us now zero in on our domestic space. Most English-speaking Caribbean nations have no motherland to rely on. Most of the islands don't have the abundance of natural resources like Venezuela, so significant deliberate and fiscal heavy alignment with some superpower is unlikely. As indigenous people of this region, we must therefore be intentional in safeguarding the region's investability. This encompasses many factors like food security, energy security, but tonight we focus on capital markets. Over the next 2 days, we offer and invite deep discussion on the free flow of capital in the Caribbean, the free movement of talent in the Caribbean, regulatory harmonization in the Caribbean, and the broker-dealers' responsibility to regional stakeholders, because there is no bailout. It's on us. For example, Jamaica was on a very positive trajectory, and then COVID hit. Jamaica recovered from COVID and regained momentum. Net international reserves now exceed $6 billion US. Debt to GDP was projected to go sub 70% in 2026. And Jamaica's international credit ratings continuously improve. And then Beryl, and then Melissa hit. Tomorrow, the Honorable Minister Fayval Williams will kick off our conference, and I'm sure we will gain further insight into Jamaica's fiscal trajectory and how Hurricane Melissa may or may not affect same. You know, when St. Martin was devastated by Hurricane Irma, the place was leveled, the entire island. The Dutch military flew in, restored law and order almost overnight, and built the largest white air-conditioned tent to operate their Princess Juliana Airport. This is what I mean when I say that there's no motherland for us. And post-Melissa, Jamaica will once again get up and get going and regain our positive trajectory. Our domestic capital markets will play a major role in post-Melissa economic recovery, and we look forward to hearing more on this over the next 2 days. Prime Minister Holness, Minister Williams, the broker-dealers and our capital markets are and will continue to play a significant role in the rebuild of Jamaica, and we stand ready to work with the government of Jamaica to accelerate the rebuild. The capital markets have the ability to be very creative and think outside the box. We can bridge the gap in capital recovery inflows that take some time to be received. Again, we look forward to hearing more on this during the conference. I'm just going to switch gears now to the second factor, regulatory change. Most of you would know the adoption of Basel III and the Twin Peaks regulatory regime brings significant change to our industry. Risk weightings forced a disciplined and scientific approach to capital requirements and asset pricing, which aligns well with the mandate of safeguarding the region's investability. The introduction of liquidity ratio requirements significantly influences the construct of the new age broker-dealer, and again, points towards a more disciplined approach to capital allocation. In keeping with the theme of safeguarding the region's investability, let us also consider that capital adequacy, liquidity requirements, qualifiable asset supply, and the increasing intensity of regulatory reach and the associated cost all make for a safer environment. But at the same time, it does significantly increase the cost of operations, which in turn creates challenges in generating adequate returns for capital deployed in our region. Compliance teams and internal governance structures are larger than ever and growing. This costs both money and bandwidth. So in essence, the hurdle rate for adequate profitability to justify capital deployment has a higher barrier. The special resolution regime would also be a big consideration for anyone considering deployment of capital into our region, into Jamaica. Foreign direct investment knows all of the above, and they have to justify to their capital owners why our region ought to be considered. If one can deploy capital anywhere in the world, what would make our region attractive where capital allocators demand a compensating return on equity for the risk and nuances of investing in our territory? The question before us is simple. How do we make our region investable? I hope these reflections encourage thoughtful discussion over the next 2 days. To my industry colleagues, let us all be responsible in pursuing our returns with a broader domestic and regional agenda, knowing that there is no bailout as there is no motherland. Our challenge is to strike the right balance safeguarding stability while creating sustainable returns, and to build a region that is self-sufficient, resilient, and globally investable. Thank you for your time and attention this evening, and for those visiting, welcome to Jamaica.
That was Angus Young, CEO of NCB Capital Markets, speaking at the JSC's Regional Investment Conference about 3 weeks ago and making some very interesting observations. I don't see a whole lot of comments in the chat. Maybe we're just paying too keen attention, but I'd love to hear your thoughts on some of the points that he raised. He was talking about how, the Caribbean is not isolated or insulated from the developments that are happening in the region, especially when it comes to United States and Venezuela, the various power struggles that have been playing out. So when you look at how Trinidad's economy is tied to what was happening in Venezuela, accessing Venezuela's gas fields, and now the U.S. stepping in, and the political sides that Kamala Persad-Bissessar, their prime minister, took, whether that paid off, it would seem so. This just makes the invasion of Venezuela an immediate national security concern, really, for all of us in the region, not just an issue for Venezuela or an issue for Trinidad, because of all the implications and the ripple effects that it has on basically all of us. And then when you look at the close resources, the proximity between Trinidad, Guyana, and Venezuela, also Suriname, which we don't talk about enough, but Suriname is also a major emerging power in the oil industry. We really have to look at the overall implications that this has for us as investors, for us as capital markets, for us as economies, and what is going to be playing out in the short to medium term, and then, of course, in the longer term. And one of the key questions Angus asked as well is, in light of all this that is happening, how do we make our region investable? What do we as Caribbean people need to do to attract and keep capital here? And that keep part is important because, yes, we get lots of FDI, the foreign direct investment, it comes, but then it also goes. So you have investors who put money in and then they take it right back out. The money goes, especially in the tourism industry, money come in, money go out. And that is a problem for us as Caribbean economies, being able to create that wealth and keep that wealth here. So I'd love to hear your perspectives on how all of this is going to affect Jamaica or your country, whichever country you are in. And then how do we make our region investable? So keep the comments coming in the chat. Now, I want to move on to our poll question for tonight, which is unrelated to this topic. It is a discussion that we've been meaning to have as well. We've been trying to get Barita to join us. So hopefully next week or a week very soon, we'll have Barita joining us because they've been making some pretty big moves lately, including the acquisition of JN Fund Managers, which makes them one of Jamaica's biggest asset managers. So our poll question tonight is, how do you feel about Barita acquiring JN Fund Managers and becoming one of the largest asset managers in Jamaica? And here are your options. A, they're growing too big, too fast. B, that's great, Barita for the win. C, side-eyeing JN. I've been seeing a couple articles about them. And other, leave a comment. So what do you think about Barita acquiring JN Fund Managers to become one of Jamaica's biggest asset managers? A, they're growing too big, too fast. B, that's great, Barita for the win. C, side-eyeing JN. Or other, leave a comment. Leave your answers in the chat, or you can take that poll over on the community tab here on YouTube or on X, formerly known as Twitter. And in tomorrow's email, tomorrow morning's What's Hot in Business email, you can subscribe at getmoneynews.com. Up next is your market recap, and our analyst is standing by.
Time now for your market recap, brought to you by MyMoneyJA.com, the official data partner of Money Media. Get 10% off your subscription with the code MONEYMISSION. The JSE Combined Index gained 4,600 points last week. That's 1%. 128 stocks traded across the main and junior markets for the week ending Friday, February 6, 2026. 37 made gains, 79 lost value, and 12 stayed the same. 126 million shares changed hands on the Jamaican dollar market, valued at $629 million. TransJam was the week's most traded stock, with 35 million shares changing hands. It opened the new week at $5.88. Kintyre traded the second highest volume, starting Monday at 43 cents. And Wigton rounded out last week's most traded stocks. It started the week at $1.22. Now let's see who had the biggest gains. Cygnus Credit Investments 8% Class 1 preference shares was the top stock last week. It opened Monday up 17%. CAC 2000 gained almost 17% to start the new week at $2. And PBS USD shares started Monday at $1 US, up 16%. On the losing side now, medical disposables and supplies was the week's biggest loser, down 25%. It started the week at $1.08. Mayberry Jamaican Equities lost 21% to start Monday at $6.05. And AMG Packaging and Paper lost almost 18%. Over on the Trinidad and Tobago Stock Exchange, the composite index gained 14 points last week. That's 1.5%. One Caribbean Media was the TTSE's most traded stock. It opened Monday down 1% at $1.35 TT. CIBC Caribbean Bank was the TTSE's top gainer, up 7%, while National Flour Mills fell 4% to open Monday at $1.43 TT. Over in the U.S., the Dow Jones was up 1.5% last week, while the S&P 500 was mostly flat. The Nasdaq lost 1.5%. At the pumps, the cost of 87 gas was up 18 cents last week, while 90 went up 17 cents. Meanwhile, the cost of diesel rose $1.18, and ultra-low sulfur diesel gained 95 cents. In foreign exchange trading, it took an average $157.14 Jamaican to purchase $1 US last Friday. That's 40 cents less than the week before. $1 Canadian cost an average $115.31 Jamaican. $1 British pound cost $212.91 Jamaican. And you could buy €1 for $185.03 Jamaican on average. Finally, on the crypto markets, Bitcoin prices fell 4% over the last 5 days, trading at $70,084 on Monday. Ethereum prices were down 3%, trading at $2,079 on Monday. Market Recap was brought to you by MyMoneyJA, the official data partner of Money Media. Guess what, guys? The Money Mission workbook is now on 7 Crave Marketplace for same-day delivery within Jamaica. Exciting news. All you have to do is go to MoneyMissionJA.com and you can select your delivery option. For global delivery, select Purchase on Amazon. For local delivery, fulfilled the same day by 7 Crave Marketplace, click 7 Crave. Or you can go to any of the following Fontana Pharmacy locations to get your copy. We're at Montego Bay, Fairview. We're at Waterloo. We're at Barbican Center and Barbican Square, Mandeville location, as well as Ocho Rios. Let's get this workbook. This segment of Taking Stock, The Analysts, is brought to you by Sagicor Investments. The views expressed in this segment are not necessarily the views of Money Media. This information is for educational purposes only and is not intended as financial advice. Please consult a licensed financial advisor before making any investment decisions.
Welcome back. Let me check the comments before we go to our guests, our analysts for this evening. We've got Chris joining us from the cold north. Humble Boss checking in from White House in Westmoreland. Antoinette reminding you guys to like the video, pointing out that we have 128 live viewers. We're at 145 now. and only 21 likes. Guys, come on, we can do better. Hit the like button for me, please. Nana Sen said, let's hear the Prime Minister's speech. We played that like 2 weeks ago, I think. It was much longer than Angus's presentation. So I only did excerpts, not the entire thing. But we did play that a couple of weeks ago because the PM speech was very, very good as well. User says he spoke about a lot. I'm interested in the part about increased regulatory oversight. Yes, I've been covering that for the past couple of weeks as well. Since the conference, we did probably 2 or 3 videos on that very issue, sparked by the PM's comments during his speech. Antoinette says, I guess Jamaica will be itching for oil find also. Have you noticed that it's been in the news in the past week? All this speculation, does Jamaica have oil? As she says, Exxon has been soaring for a couple of weeks. Javon says, energy is the base of the tension and can become an issue for us too once oil is confirmed here. Trust me, will become an issue for us if oil is confirmed here. Basilio says, increased energy output. We've got Chris joining us from Mobay. We've got Ryan, who says, as long as we align ourselves with the USA and the Monroe Doctrine, investment in the Caribbean will be safe. Oren commented A, so he was commenting on the poll question, which was about Barita acquiring JN fund managers to become one of the largest asset managers in Jamaica. And your options were they're growing too big too fast. That's great, Barita for the win. Side-eyeing JN, other leave a comment. So Oren says A, they're growing too fast. Madwalk says the Caribbean needs more unity. If we are going to manage the future ahead of us by ourselves, it will be very turbulent, but together we could build complementary economies and address underpopulation. And then Mad Dog says, just imagine if we had a big Caribbean stock market. Wouldn't that be nice? In an ideal world, but we still have to solve the currency issue. CSME has been almost a flop. If they can't make that work, I don't know. Who knows? Maybe private sector can make it work rather than governments combined. But anyway, as we move on, let me introduce our analyst for this evening. You've seen her before on the show quite a few times. Her name is Jodian Aris, and she's the Assistant VP at Sagicor Investments. Welcome back, Jodian.
Hi, thanks for having me. Hi, everyone.
Great. So tonight we're talking about international credit ratings for Jamaica. So we had Fitch, which recently reaffirmed Jamaica at a BB- with a stable outlook. And we know BB is just like right below. We're just on the cusp of investment grade. So from BB- we would go BB, then BB+, and then we enter the BBB range, which is investment grade, which is where we want
the good zone.
BBB and up. So what does it mean, despite everything happening with Hurricane Melissa, that Fitch has reaffirmed us, they kept us steady with a stable outlook at BB-?
So it's not all totally negative. I think when you consider the fact that the gains that we have made as a country so far, to get to a BB-, it's still noteworthy, of the work that we'd have put in. I think part of the expectation in terms of how it is that we would have been performing and our trajectory towards debt to GDP being much lower has now slowed because of the hurricane. So that will have a big shock to the economy. And so we'll see a bit of some of our usual economic metrics seeing a bit of a slowdown in terms of before they can reach targets that we'd want to see that would help us to move into that investment grade category. I think when we compare to what would have happened in November, so Fitch would have been one of those rating agencies that came out quite early after the hurricane to give an update. And so their initial rating in November was that they moved us from positive to stable. So what we're seeing now in February is that they would have maintained that same BB-, and they would have maintained that stable outlook that they would have assigned in November. So it could have been worse. We could have gone to a negative outlook, and so we still have to think of the positives here. Being stable outlook is still something that's pretty decent. I think other things we'd have seen is in terms of their expectation for GDP. And so for 2025, the expectation is that we could see a contraction of 1.5%, which is generally in line based on where the 9 months estimates were from starting. We'd have seen, strong recovery growth from Hurricane Beryl the prior year that would have boosted the Q3 numbers. However, when it is that we think now of the impact of Hurricane Melissa, we know that that's going to have a strong drag on the economy, particularly for Q4. And as such, we expect that we'll see, the overall for 2025, have a contraction. The estimate is about 1.5, which is in line with what it is that we'd have done in-house. One of the things that Fitch would have mentioned in November is that, coming from an economic contraction of 1.5, they were actually estimating that we could see a recovery as early as 2026. However, with more information coming out in the February report, we're noting that Fitch is now saying that their expectation is that we'll see a contraction in 2026 of about 2.6%. So that is a little bit of
That actually doesn't sound so bad. Like based on the huge impact, we're talking about billions of US dollars. I thought it would be a higher number in the negative.
Well, initially they had a 1.8% growth for 2026, and so they have revised that now to a contraction of 2.6. It's still early days as yet. So I think what will happen in terms of the economy is that you're having a plane of recovery efforts that is going to cause some ramping up and boosting in some areas, even though it is that there are other areas that will have a bit of lingering from the impact of the hurricane. So you'll have some what you call probably counterbalance in terms of activities. So for example, if you look at the agricultural food prices in December and at the start of January, and then you notice as we're in February, hot peppers are not as expensive or not as hard to purchase as they were probably a month ago. And so you'll find that production will ramp up in a lot of areas, and that will boost some of the recovery efforts and will kind of provide a bit of a counterbalance for areas that may take much longer to return. So areas like tourism are some of the areas that we may not see return to normalcy as soon as we'd like. And we'd also do a lot of watch and see. It's a full year of 2026 and we're just 6 weeks in. And so, a lot can still happen. And, I'll always say that when you look at projections, you want to think about it like a 100-meter race. And so far, we're just probably just out of the blocks. And so there's a whole lot that can happen before we get to December. They would have also provided some numbers in terms of debt to GDP. Those have not shifted much from what they would have reported in November. In November, they were expecting it probably close to 68% debt to GDP ratio. Now in February, they're looking at probably close to 70%. So not so far off, but a little bit higher in terms of the upper end than they would have had it prior to. They would have also been banking on a rise in remittances. And I think one of the things we'll note when we think of remittances, even though we have noted in the recent numbers that we'd have seen a bit of an increase in remittance, is that part of the recovery efforts, which should be a little bit different from what we'd have seen probably in a COVID, is that persons are not just remitting cash, but persons are actually sending goods. So you could see, that expectation for a boost in remittance numbers may not be as high as we'd have initially projected. And that is one of the key areas that we'll be watching to see how that has an overall impact on.
Do we track that though? Do we track that particular number, like the goods that diaspora sends back home?
So we do have imports. So you can probably look at the categories and you can probably notice increases in certain categories and, attribute it to the hurricane. But it's not necessarily, you'd have to do a little bit of data mining to kind of pick out exactly that information.
Yeah, no, you made a lot of good points, Jody, especially noting the recovery in agriculture. I saw bananas recently and I was like, oh, bananas, haven't had those in a while. Guess how much for the banana? The lady says 6 for $1,200, $200 for one banana, ripe bananas I'm talking about. I was like, never mind.
But what you'll find is that there'll be some areas that ramp up to kind of help with the fall off in some other areas in terms of production in the country. So typically, our baskets, area would be like a St. Elizabeth. But what you'll find is that areas such as, Upper St. Andrew, St. Mary, and other areas that were not as heavy in agriculture will probably, fill in that gap.
Hopefully. So we're talking at the beginning of this segment about the upgrade, sorry, not the upgrades, the rating by Fitch, credit ratings, the reaffirming at the BB minus. And I gave you guys the categories. I said, okay, it goes from BB minus to BB to BB plus to BBB, which is where we want to be in investment grade. What will it take for Jamaica to get that bump up in the next 12 to 24 months? What would we have to do?
So one, I think it's going to take a little bit more than probably 12 to 24 months. I think if we even looked at the original trajectory prior to the impact of a Hurricane Melissa, at 12 to 24 months would have been a very ambitious target to move up all of three places. So, debt to GDP currently likely to be eroded and not really meet our mark that we'd have planned to be by close to lower 60%, as we'd have indicated from government projections. That is likely going to have some impact. So if it is that we're able to grow GDP in such a way that our debt to GDP ratio comes down in a very drastic way, then that would be one of the things that would really push us towards investment grade at a faster pace.
So that was initially pre-Melissa predicted to fall to 60% by next year, 2027. Mm-hmm. Is it still possible to achieve that?
I highly doubt that, considering that we'd have taken on some amounts of debt coming out of this event. So the government would have increased the debt, and so that's projected to increase. And on the other side, we're expecting to have some sort of a contraction in GDP. So it's very unlikely that we'll be at that 60% target. And so that would take us a little bit longer to get there.
Right. So both ends of the equation are affected.
Right.
The debt side rising because we had to borrow following Melissa, and then the GDP side falling because of the contraction because of Melissa. So it throws everything out of whack. Now, Jody,
the government would have suspended the fiscal rule for 2 years. So they're given a bit of a leverage to do more in terms of borrowing than they would have initially planned. So that there also factors into the fact that we're very unlikely to hit that 60% debt to GDP in another 2 years.
Yeah, I do think that the rebound is going to be strong, though. When those rebound numbers come out, based on everything that is planned, all the funds that are coming in, I think Jamaica's economic growth post Melissa, the recovery, I think those are going to be some strong numbers when we finally see it on paper.
Agreed.
Now, before we go, Jody, we do want to talk about local stock market, which is what this show is really designed around. We do talk a lot of economic news, but we also talk a lot of stock market news. And we have Last M and Wisynco reporting performance numbers since Hurricane Melissa. So let's start with Last M. What are we seeing there? So these are two major manufacturing companies.
So one of the things we know with Lasco Manufacturing is that they would have indicated actually as a fall in revenue. However, they would have noted that they would have seen a growth in net profit. One of the things for them that would have factored into a reduction in revenue is actually that long slowdown period. So if you recall, when we were going into the hurricane, it was almost as though the hurricane took forever to arrive. It took a long time. So schools were closed probably a week out before the actual event itself. And so what that meant is that production activities would have slowed down. Once you turn off in these major manufacturing houses, once you turn off production, reopening is not just a flip of a switch. It's actually a ramping up activities. So that would have factored into a bit of what they would have considered to be part of what caused a dip in revenue, just the fact that they would have lost some production days due to the impact of the Hurricane Melissa. So that would have been a strong impact for them. However, they were able to curb their expenses, which allowed for actually an improvement in net profit, which is actually quite good and impressive. And I think one of the things, if we, jog our memories and we go back to how it is that these companies would have learned in terms of responding to shocks coming out of a COVID, you're seeing a bit of that playing out now, where revenues may fall, but there is a bit of a pullback in terms of expenses that still helps to protect the bottom line in terms of that performance. So those lessons learned, even though post COVID, they tend to know that persons or companies tend to, shift back to normal and probably see, erosion in expenses. But, you're easy to tap into those lessons learned and build back to say, let's cut on expenses based on what it is that we are seeing.
So let's look at Wysinco now. So we had Last M, and now we have an even bigger manufacturer, Wysinco, reporting post Melissa numbers. How does it compare to what Last M reported?
So what Wysinco reported was actually higher revenues as well as higher profits. And what they would have pointed to for them that would have helped is that they would have also had exports. And so even though there would have been a bit of contraction on the local side of the market, exports is actually one of those areas for them that would have boosted some of demand. I mean, as well as you can think about the fact that Wysinco does quite a bit of water production, and that was in heavy demand. There were points you went to price mart and there was no.
But Last M also has a water brand.
Right.
They also export too, don't they?
Not to as heavy an extent, I would say, as does our Wysinco, because Wysinco would have done quite a bit of shift towards export coming out of a COVID period, where it is that they realized that they were heavily reliant on the domestic market. And so part of their expansion at Wysinco was really geared towards fulfilling and meeting demands in the export markets. They would have also pointed to the new brewery that they would have had, and in terms of production coming from that would have also boosted production.
The product sell off, the Legend beer. I've tried it. It is pretty nice. They're giving Red Stripe a run for their money.
Yeah, so that would have been another factor as well for Wysinco, which again for me, reminds me of a COVID-19 and that impact, where it is that they would have switched to what we'd have seen as more exports, as well as just the expansion of your product lines that gives you an ability, once it is that there's a heavy impact in one area, that you could benefit in another product line.
So they weren't as impacted by Melissa as Last M.
In terms of right.
So I think Last M should be watching and taking notes. How does
I think that also for Last M, even though they had lower revenue, they were still able to produce higher profits. So that's really still something commendable for Alaska manufacturing.
Absolutely. We always like to see higher profits. Thank you so much, Jodian, for sharing your insights with us this evening. Always appreciated as usual.
Alrighty.
We will take our final break and come back with your comments. I see quite a healthy debate going on in the chat. We'll take a look at those.
This section of Taking Stock, The Analysts, was brought to you by Sagicor Investments.
Subscribe to my newsletter for money news like this straight to your inbox. Go to getmoneynews.com to sign up. The link is in my bio. Let's get this money.
So first of all, let me take some of the comments on JN Barita. And then I see a lot of comments about CARICOM single market, CARICOM stock exchange. So let me try to see if I can filter them and kind of group the comments together. So Javon says, that's great, Barita for the win. JNFM clients now get direct access to Barita. Interesting comment here by Lovebirds, who says, didn't Ramon work at JNFM before moving to Barita? I think he felt obligated to rescue them. I highly doubt that. It's your former employer. Why would you feel obligated to rescue your ex-boss, your ex-workplace? I don't know. I wouldn't feel any such sense of obligation at all. Roswell says, yeah, B for Barita. So the B in our options was, that's great, Barita for the win. So Roswell says, B for Barita, it is natural for a company seeking growth opportunities, big asset management, more money to leverage. Do I have any more comments here on Barita? Let me see. Roswell again says, JN fund managers had 3 years of consolidated losses on their portfolio, not good business. All right, let's move over to the other topic now that a lot of people are weighing in on, which is the possibility of a Caribbean stock market. So Roswell says it is possible to have a big Caribbean stock exchange. JSE needs to get in dialogue with the company that has the technology for real-time and multi-jurisdiction settlements. Which company is that, Roswell? You said the company as if you have identified the company. Which company is that? Madwalk, the boss, says, I don't even like the idea of CARICOM. I am low-key a unionist, and I think we would have a lot more geopolitical sway if we were a single country. Oh, you want to go back to Federation? West Indies Federation? Interesting. Troyans wants to know, what are the benefits of a Caribbean stock exchange? What are the benefits of a Caribbean stock exchange? Well, Caribbean companies would have wider access to a much bigger market. If we work as one, then I can list on a single market and be able to have subscribers from all over the Caribbean pooling their money. I guess you can still kind of do that by cross-listing on the JSE, which a lot of Caribbean companies do. You do not have to be a Jamaican company to list on the Jamaica Stock Exchange. I have to give that some more thought. What would be the benefits? And to me, the currency issue is one that we have yet to resolve, which is one of the reasons CSME hasn't worked. But I do think it would give Caribbean companies broader access in general if we were able to do that. Reds was here, says Jamaica needs to diversify from tourism and the BPO sector as a way to earn foreign income. Our currency has been devalued enough for us to start looking into manufacturing and exporting for locally. Mad Dog, more stable stock market due to higher volume, more investments from everybody. Okay, he's answering the previous person's question. More options, and if we're reforming the stock market, maybe loosen the rules to make it easier for companies to list. Ryan is solving the currency issue. Ryan says, create a Caribbean block currency or just use the USD to help trade across the Caribbean states. Mad Dog kind of echoing that we would need a new dollar, which is not easy, or like Ryan said, just use the USD or pick a stable country in the Caribbean to be the default currency. And therein lies the problem, because we have different systems in the Caribbean. So Jamaica has a floating exchange rate, but Barbados, for example, has a fixed exchange rate. Trinidad has technically a floating, but it doesn't really float because it's been at one level for several years. Guyana has technically a floating as well, but they kind of keep it stable as well. I think in the region, Jamaica probably is the only one that has an exchange rate that really does fluctuate day to day, sometimes significantly as well. Belize, as you know, has a fixed exchange rate pegged to the US dollar since I think the 60s or the 50s at 2 to 1. And I know, coming from a country that has that fixed exchange rate, how precious Belizeans, for example, hold that fixed exchange rate. Like, that number is pegged in their minds, and if politically it would be unwise for any government to want to switch to a different form of measuring your currency, to switch to, for example, a floating exchange rate. So Jamaica's currency might be going up in value, while other countries' currency would be coming down in value, and no country wants their currency to come down in value. That's just the simple reality of it. So Jamaica is at 150 something, like 156 to 1 US now. I think Guyana is at about 200 to 1 US. And then you have the wide discrepancy, Trinidad being at 640 something to 1 US, Barbados and Belize being at 2 to 1 US. How do you decide? Politically, it is a very, very, very sensitive issue amongst the populations of these countries. Think of when the JMD slides. If we slide $10 from 156 to 166 in a short amount of time, the amount of concern that that causes. Think of the IMF years when we slid from 80 to 125 in a fairly short time as well in the 2010s. For any other country that has an exchange rate 6 to 1, 2 to 1, to have to go down to 50 to 1, for example, that is going to be extremely unpopular politically, and that makes it difficult for us to come together. Even though economically it may make sense, that psychological barrier that people have, that connection that they have to their exchange rate, is one that is really, really hard to overcome, especially when you have populations that aren't really educated in finance and in these types of matters. So Oren says that would work if we have a united CARICOM. You hear the TT Prime Minister, how she carry on? It would be nice to have a CARICOM market, but you don't see it happening. And then Oren says some member states feel like they are better than others. Mad Dog says, yeah, true. Division is always keeping us behind. Every other strong country is united. I mean, they're called USA and EU for a reason. We're not learn. Oren says, I know if we had a Caribbean stock market, TJH would be through the roof. It already is through the roof, Oren. What more through the roof do you want? Lanestra commenting with Cinco trading near its 52-week high. Good to know. Let me see if we have any other comments. We do have a few more comments. Draydan Beats commenting Supreme Ventures getting a beating. Sagicor stock is up 19% over the past 3 months. On the Toronto Stock Exchange, 20.9% over 3 months. Okay. Roswell says Lasco Distributors is a good company long time. We're talking about Last M, not distributors, but she says Last D is a good company, nice dividend payouts. Lasco Manufacturer is also good on the business side, like how they managing inventory. And then we have a couple comments here from Ronnie, who says, given the downward pressure on the US dollar, probably not a great idea to use it to peg to. And Ronnie again says, without a Caribbean Union, it would be very challenging to get to a common currency. So great comments. Thank you guys for weighing in on everything. I appreciate your presence as usual. I appreciate all the ideas in the chat, the debates in the chat. I think that's what makes this show special, and that's what makes it fun for me to come here every week and do this show. Guys, remember to please like the video, subscribe to the channel. We're at 80,000 followers. My goal for this year is to get to 100K so that I can show my kids my YouTube plaque, and also so that we can all get the money together and share the information, share the knowledge of wealth building with a wider array of persons across Jamaica, across the diaspora, across the Caribbean, and across the world. Subscribe to the newsletter as well at getmoneynews.com. And you can also find all our content over on the website moneymediaja.com. If you're interested in learning more about how to invest, how to get started with all of this, moneymissionja.com is the place that you need to be for the workbook and also for the Investing for Beginners online course. Guys, until next week, I am Kalila. Thank you to my hardworking production team, the lady Sashel Williams, Izzy Ramsey, Alexa Roberts. Thanks for joining us. I will see you again next week. Until then, let's get this money.